Welcome to Lesson 4 of Module 2, Risk Management. In this lesson, we will cover risk-to-reward ratios and how to effectively manage your trades. Understanding your risk-to-reward ratio is crucial. It is essentially your trading edge. The ratio compares how much you risk versus how much you stand to gain. The R/R ratio is calculated by dividing your potential profit by your potential loss. For instance, if you risk 50 pips to gain 100 pips, the ratio is 100 divided by 50, which is 2. This represents a 1-to-2 risk/reward ratio. The risk-to-reward ratio matters most because you do not need an extremely high win rate, like 80%, to be profitable. Consider two traders. Trader A, with a 70% win rate and a 1-to-1 R/R, nets $40 from 10 trades. Trader B, with a 40% win rate and a 1-to-3 R/R, nets $60 from the same number of trades. This demonstrates the power of a favorable R/R. We recommend a minimum 1-to-2 risk-to-reward ratio on every trade. A 1-to-1 R/R requires a 50% win rate just to break even, which is generally not worth the effort. A 1-to-1.5 R/R, requiring a 40% win rate to break even, is barely acceptable. A 1-to-2 R/R is your minimum standard, requiring a 33% win rate to break even. A 1-to-3 R/R is excellent, needing only a 25% win rate, and a 1-to-4 R/R is outstanding, needing a 20% win rate. You must calculate your risk-to-reward ratio before entering every trade. To calculate R/R, first identify your entry, stop loss, and take profit. For example, risking 50 pips to gain 100 pips results in an RR of 1-to-2. If the R/R is less than 1-to-2, you should adjust your levels or skip the trade. Not every setup is worth trading. You should pass on a trade if the R/R ratio is less than 1-to-2, or if the stop loss would violate the 2% rule. Also pass on trades if there's no clear take profit level, if the stop loss is too tight or too wide, or if the take profit is at weak resistance. When managing winning trades, let your winners run, but remember to protect your profits. Move your stop loss to break even once the trade is up 1-to-1. You can also take a partial profit at 1-to-1 and let the rest run to 1-to-2 or 1-to-3. Further protect profits by using a trailing stop and never closing winners early out of fear. If the trade hits 1-to-2, lock in at least 1-to-1 with a trailing stop. Let the final portion run to extension targets if momentum is strong. For losing trades, cut your losses fast. You must never move your stop loss to increase your potential loss. Remove your stop loss hoping for a reversal or average down on a losing position. Accept the loss, review why the trade failed, learn, and then move on. Avoid revenge trading to make back the loss immediately. The break-even move is a powerful tool as it allows for risk-free trading. Move your stop to break even when the trade moves 50% to 70% toward the target, or when the price breaks through key resistance or support. Move the stop loss to the entry price plus the spread. The worst case is then a zero loss, and the best case is full profit. Here is a trade management checklist for your protocol. Before entry, calculate the R/R ratio, ensuring a minimum of 1-to-2. At entry, immediately set your stop loss and take profit target. At 50% to the target, move your stop to break even. At 100% to the target, consider taking partial profit. Use a trailing stop if momentum is strong. If stopped out, accept the loss and review. If the target is hit, acknowledge the success and prepare for the next trade. Avoid common mistakes that can kill accounts, such as closing winners too early, holding losers too long, moving the stop loss away when losing, or not moving to break even. Further mistakes include taking profit early out of greed, revenge trading, ignoring your trading plan, and checking trades too frequently, which leads to emotional decisions. Key takeaways: maintain a minimum 1-to-2 R/R ratio. A good R/R is more important than a high win rate. Calculate R/R before entry and move your stop to break even when the trade is 50 to 70% toward the target. Module 2 is complete. Next, we will begin Module 3 on technical analysis. Remember to let winners run and cut losers fast. Never move your stop loss to increase your loss. Take partial profits at milestones, and, most importantly, stick to your trading plan to prevent emotional decisions.